Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi mining community, welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Mark Learmonth, who's the CEO of Caledonia Mining, who are a gold producer with a 64% stake in Blanket Mine and have other assets in Zimbabwe. Mark has over 25 years experience in corporate finance and investment banking, predominantly in the resources sector across Africa, and has been with Caledonia Mining for over 15 years. And he's going to tell us a little bit about the history of the company, their project, and how Zimbabwe is as a mining jurisdiction. Mark, welcome to the podcast. How are you doing?
I'm doing very well. Thanks for having me.
No, appreciate your time also. So, as we always start these podcasts off, just wonder if you could just tell us a little bit about your career, about your background. Obviously, as I mentioned, you're in were in corporate finance and investment banking. So I just wonder if you can just run us through your career to sort of present day.
Yeah, thank you. I qualified as an accountant in London in the mid-80s. Then left that as quickly as I could and went into what then was merchant banking with an English merchant bank. Did that for a few years, then moved into what I guess you call investment banking, and gravitated towards resources work in Africa, and ended up running the investment banking business of a domestic banking operation from Johannesburg in South Africa, where we had a great time. We did loads of deals for the likes of Sud Electra, who became Xstrata. We did a lot of BE deals. We set up Patrice Motsepe, a lot of time buying assets for him, and then latterly we did quite a few deals for Harmony when they were picking up quite tired assets from people like Anglo American. So that was all good. Ended up at Macquarie, and then just shortly, and just purely by accident really, shortly before the financial crash in 2008, I decided that I'd had enough of interfering in other people's businesses, and it was probably a good time to get involved in I call it my own business. It's not my business, it's owned by shareholders, but actually get embedded in a real business. And so I joined Caledonia in July 2008. At that time, we were focused primarily on cobalt exploration in Zambia. We had what we thought was a huge project in Zambia. And I guess the strategy was right in that had we found cobalt as we'd expected, I certainly wouldn't be sitting here talking to you today. But we did find cobalt, but the grades weren't very good, and metallurgically it just wasn't going to work. So we canned that. And then over a period of time, and that really was sort of 2008 to 2012, and then really as that sort of exploration project sort of wound down, we increasingly focused our activities on a little asset called Blanket Mine, which we bought really sort of for fun in 2006. We bought it off Kinross for about $4 million because they were desperate to get out of Zimbabwe. It was a good little asset, but we bought it and we basically just put it on the back shelf and left it. And it's only when we started to look at it more carefully that we realised the potential to turn Blanket from what it was then to what it is today. It became clear to us the enormous potential in Zimbabwe for gold, and so it was good luck really end up in the gold Zim space. And I say good luck. I mean, most people would think it was a mistake to end up there, but it was purely by good fortune. I've got to say it's a great place to work.
Great. So I just wonder if you can tell us obviously the history of Caledonia Mining, as you mentioned just now, obviously purchasing the asset way back. Just wonder if you can just run us through the history of the company.
Yeah, Caledonia was basically put together, I think, in the 80s by slamming together about 4 various companies, one of which happened to be an SEC company. We'll come back to that later. And certainly by the time I joined in 2008, as I said, it was focused on copper, cobalt, focused as much as it ever was focused. It was focused on copper, cobalt exploration in Zambia. We had some PGM exploration plays in the northern limb of South Africa. We had diamond exploration projects in Zambia and Canada. We had a gold asset in South Africa, which happily we sold, which was good, which actually meant we had about $30 million of cash on the balance sheet when I joined. But it was a very disparate group, and at that time it was capitalised at about $34 million, of which 30 was cash. So it was, if you take the cash out, it was capitalised about $4 million. And frankly, they got these assets, and they weren't going to go anywhere. It didn't have the financial capacity. It was never going to get traction. And so, as I say, when the copper cobalt exploration play fell over, we whittled down got rid of the non-core assets and focused the business on this core producing asset with a view to, do you know what, making money, making cash. Now, at the time, we were a Canadian company listed on the Toronto Stock Exchange. And then, as I mentioned, one of the predecessor companies happened to be an SEC company, and so that meant that constantly we were having to file SEC reports. And so, in about 2016, we decided to bite the bullet and use that SEC registration to get a full NYSE listing. So we're listed on NYSE. Having got a good listing on NYSE, then we could terminate the listing on the Toronto Exchange. And that's great because it means that now our liquidity in North America is very good indeed, which is great for getting people in, getting people out. We're also listed on AIM in London, which frankly is a bit of a sideshow. It's fine. And then oddly, we're also listed on the Victoria Falls Stock Exchange in Zimbabwe, which again we did for other reasons. We did it really to help us deal with some of the quite complex regulations in Zimbabwe, and being a VFX listed stock helped there. But actually, Zimbabwe has been a real surprise in terms of our access to capital. We probably raised more money in Zimbabwe than we have in New York. So Zim's actually been a very fertile market for us, and politically also is having local shareholders is very important. So so now we're focused exclusively on gold in Zimbabwe. I'd call New York our primary listing, with an ability to sort of trade in London if you wish, and then a third listing in Victoria Falls. So I think that's probably a summary of where we've come from.
And obviously, the business is obviously focused on Zimbabwe. Why, I suppose, as a business, why are you only focusing on or in Zimbabwe as a mining jurisdiction? I suppose moving on from that, if you can just tell us why you think Zimbabwe is a good mining jurisdiction, and I suppose some things that people may not even know about Zimbabwe.
Yeah, the main reason, obviously, we're gold focused. If you talk to any, sort of, when I say hairy old geologists, I mean people in their sort of 60s or so, they will get all misty-eyed when they talk about Zimbabwe. Zimbabwe is incredibly prospective for gold, but because of the difficulties in the country over the last, 40 years or so, there's been virtually no modern exploration at all. People who know Zimbabwe know that there's gold there in big deposits, and quite good deposits, but no one's ever really bothered to get into it. So it's pretty much elephant country, which has not had Zimbabwe's gold endowment been somewhere else, anywhere else in the world, it would have been exploited years ago. So Zimbabwe is just like a time capsule which hasn't been exploited. People in the game know that. But the reason why we can play in Zimbabwe, we're very comfortable there, is that over the course of the last couple of decades, we've actually now got to grips with how to do business there. I guess we'll talk in a bit more detail about the challenges and the difficulties of working in Zimbabwe. The biggest challenge by far is navigating the very complex arcane, Byzantine, bureaucratic and administrative system. And frankly, if you turn up there, it doesn't matter who you are, if you're a barrack or a big company and you turn up in Zim, you just will struggle to make the system work. And we've been there long enough and we know there's nothing untoward about it. I'm not for a minute talking about sort of corruption or greasing palms. It's just you've got to be able to press the buttons in the right order to get the outcomes that you need to run the business. And we're very good at that. So Zim is highly prospective. In terms of operational challenges, it's by no means as difficult as other places. And the key thing is we have this unique ability to navigate the administrative channels to make it work.
Before we talk about the Blanket Mine, what are some of those challenges, as you just mentioned, if other companies look to explore in Zimbabwe? What are some of those challenges that I suppose other companies find it difficult and you've been used to the system, having been there for a while?
The biggest challenge comes down to foreign exchange controls and the I wouldn't call them, they're not blocks. It's not the foreign exchange. I mean, many African countries have got foreign exchange controls. South Africa's got them. Many other countries have got them. Zimbabwe takes them to a level of complexity that if you don't know what you're doing, you just go round and round and round in small circles and you can't make stuff happen. So that is by far the hardest thing. And I'll be very, very, very clear. We've got a profitable business in Zimbabwe. We make money. We make dollars. And we've got no difficulty exporting the surplus cash, the profit, because it's what pays me, it's what pays our shareholders' dividends. What's difficult is it's a constant process of making sure that you've kept up to date with all of these incredibly micro regulations so that you're in a position where you can do the necessary and fill the forms in and get the money out of the country. So, case in point, if we have to say we need to send an electrical motor back to Johannesburg for mending, for rewiring, effectively that's seen as an export, and so you export that to South Africa, and then when it comes back, you've got to basically match the import form and the export form, because the Zimbabwean authorities would believe that if you can't prove it's come back, what you're doing is you're basically stripping the mine, carting stuff down to South Africa and selling it there for rands and keeping the rands in the bank. So, and that's fine for things like a motor where you can prove it's gone down, you can prove it's gone back again. It gets a bit tricky if you're talking about destructive testing of ores and other stuff where nothing comes back. It's micro things like that, and we have a team of people based in Bulawayo and Harare who just keep it running, keep that aspect of the business completely up to date, because once you fall behind, it's very, very difficult to get back. And so that, but from an admin perspective and from a sort of a barrier to entry, is probably the single biggest issue that faces new entrants to the country.
So I wonder if you can now explain a little bit about the operation at Blanket Mine.
Yeah, Blanket is an underground gold mine. It's been running since 1907. So it's been running for quite some time, eh? And it exploits a series of about half a dozen, 6 or 7 near vertical ore bodies. Over the last 120 years or something, the mine's just been chased deeper and deeper and deeper. So obviously it started off relatively shallow. When we bought it, it was running down to a depth of 750 metres below surface, serviced by a single shaft. That ore had run out, or was beginning to run out. So what we've done now is we've effectively built a new mine underneath the old mine with a new shaft. So the new shaft goes down single drop from surface to 1,200 metres, 4,000 feet. And we're now operating a new mine from 750 metres down to about 1,200 metres, with a little bit of residual activity above 750 metres. The ore, it's a free milling sulfide. So we're very fortunate that whereas most of the ore in Zimbabwe is refractory, ours is a free milling sulfide. So it's a fairly conventional system of grinding. Half the gold comes out as free gold over a Gemini table, and the balance goes through a fairly standard CIL process, we produce doré at the mine to about 85%. That doré then goes to a refiner, a government-owned refiner in Harare, where they take it up to 99.9% on a toll treatment basis. We then export 75% of that gold and we sell it to a refiner of our choice. Currently we're selling it through a refiner in Dubai. I think we've just opened up a new route through another refiner based in Johannesburg, so we get access to international markets. The proceeds of that, so if we deliver to Dubai, it gets there on, say, a Sunday morning, we get paid for we get paid 95% of the gold value, I think, on Monday morning, and the balance sometime on Tuesday. That money then goes back into Zimbabwe, which it has to, because not just legally, I mean, it has to legally go back to Zimbabwe, but actually we need the money in Zimbabwe to run the business. Got workers to pay and electricity bills to pay and tax. And then the other 25% of the gold we then sell to the government. We get paid in local currency for that, and then we use that again for our local currency requirements. So again, that's a little bit complex, but it works quite well for us. It works very well.
So I wonder if you can just give us an overview of the Bilboes project.
Yeah, so I've been talking about Blanket, which is the mine that is the cash asset, and that's producing at about 75 to 80,000 ounces a year. On-mine cost of it had crept up. We're now bringing it down. It's currently going to be about $900 an ounce, so that generates good cash. Whereas Blanket's got a 10-year life of mine based on reserves, and a life out to the mid sort of 2040s based on our life of mine plan. It's not really got growth. It's not going to get much bigger. Winding back to what I said earlier about the prospectivity of Zimbabwe, we've basically put together a portfolio of development and exploration assets, the first one of which is the one you mentioned now, Bilboes, which is an asset. Blanket is about 180 kilometres southwest of Bulawayo. Bilboes is about 80 kilometres north of Bulawayo. Bilboes has got a resource endowment of 2.5 million ounces at a grade of 2.3 grams a tonne, another 500,000 of inferred. And there was a feasibility study when we bought it, which we've done our own work on that. We recently published a PEA on the project, which caters for a mine producing a series of open pit operations, producing 1.5 million ounces over 10 years. So it's an average of 150,000 ounces a year. Higher in the first half of the mine, lower in the second half of the mine life, at an all-in sustaining cost of just below $1,000 an ounce. Capital cost, peak funding requirement is just over $300 million. At a gold price of 1884, which was a 3-year trailing gold price when we prepared the PEA, and at a discount rate of 10%, which is quite high, you're looking at an NPV of about just north of $300 million. If you use spot gold of, say, 2,500 at a discount rate of 7.5%, that more than doubles. So it's got substantial upside to the gold price. So where we are now is that we're now upgrading that PEA to a feasibility study. The only reason it's at the level of a PEA is because we revisited the approach to the design of the tailings facility, and we'll do that tailings facility on a modular basis, which is something we learned at Blanket, which will reduce the upfront funding requirements. Tailings facilities are expensive nowadays, eh? So the only reason the overall body of work is to a PEA level is because the bit relating to the tailings is at a PEA level. We'll upgrade that and probably publish a feasibility study probably in Q1 next year. I'm not expecting any surprises. And then it comes down to funding it and then building it.
How do you propose to deal with the refractory ore at Bilboes?
Yeah, it is refractory. Typically, most people would say that the refractory nature of the ore means that you've got to take 1% off the 1 gram a tonne off the grade. So I said it's 2.3 grams a tonne. Even if you were to take a gram a tonne off, that takes it down to 1.3, which is still high in comparison to many of the new open pit operations that are coming on stream in Africa. We're proposing we will be using BIOX. We've done a lot of work on that. If people are familiar with BIOX, it's it's a it's almost like a biological process where you introduce enzymes into the slurry, and they digest the material and effectively excrete the gold. Now, BIOX in Africa is a well-proven, well-tested metallurgical processing technique. Outside Africa, it's certainly in North America, maybe a little bit less common, but we're very comfortable with that. The recoveries that we're looking for in the mid 80% up to maybe the low 90s. So we'll be going down the BIOX route.
And obviously the Bilboes project will cost obviously more than the Caledonians' current market capitalisation. How do you sort of propose to fund this project?
Yeah, that's a good question. Our market cap is currently, $250 million, so you're quite right. And the CapEx build for the project exceeds our market cap. Don't forget, we do have a cash generative asset which will make some contribution. So I'll be clear right now, we're not in a situation of a single asset developer where we need to raise equity every single quarter, every year, just to keep the lights on. We've got cash coming out of Blanket Mine, quite healthy cash, which we'll use to certainly keep the lights on and make a modest contribution, but certainly not the amount we're looking for. Because the Bilboes project is got a very low all-in sustaining cost, the payback period is just less than 2 years, about 1.9 years, and that's using a gold price of 1884. If you start applying the current gold price, the payback period falls to 1.5 years. So with that, it can support a high proportion of debt funding. And so we had done some internal work ourselves, which made us sort of comfortable about that. We've engaged a London-based mining finance specialist called Cutfield Freeman. They've just finished their own assessment of the debt capacity of the business, which more than reinforces the view that we'd taken. So we're looking at a significant proportion, considerably more than half of the total funding need should be capable of being funded by debt. Now, I don't for a minute think that the likes of Barclays or Credit Suisse or commercial Western banks are going to be venturing into Zimbabwe. We do know that there is appetite from what I'd call DFIs, development funding institutions, people like Afrexim, African Finance Corporation, to invest specifically in this project. They know this project well. They've looked at it before. They've actually given indicative term sheets to the previous owners. So what we'll be starting very shortly is having done our own internal work to validate with external specialist support our own internal assessment. We'll now be looking to move ahead with that process of securing debt funding package for the project. And also we think in addition there may be other sources of non-dilutive funding available to us. So our approach to this, and it sounds very simple, but we really mean it, is to maximise the NPV per share Caledonia. And so that means obviously doing the project in a way that maximises the overall project NPV, but funding the project in a way that minimises dilution. And we're very comfortable that the project of this size and this quality, with debt funding which it can comfortably support, should result in a very, very substantial uplift in Caledonia's NPV per share, which hopefully in due course will then flow through to a significant increase in share price. And let's be clear, just using an all-in sustaining cost of less than $1,000 an ounce at this gold price, that mine will produce thick end of $250 million worth of cash a year. So it's big and it makes a lot of money. Even once you've repaid the debt, which might take a year and a half, 2 years, there's a lot left over for Caledonia shareholders.
What is the company's, I suppose, medium to long-term vision?
Yeah, it's simple. The first thing is we've got to recognise that Blanket, little old Blanket, the mine, the deep level mine that's been running since 1907, that is the cash cow that pays the bills, keeps the lights on. And we must be very careful that we don't neglect that. So we are continuing, and we've restarted exploration there. We've had some great exploration results at Blanket. Whilst the focus is to is on the Bilboes project to bring that to fruition. We must make sure that we don't neglect the core business which generates the cash. So it's a combination of getting Blanket to the best place it can be so that it can reliably generate cash for as long as it can, maybe extend the mine life even further. But by far, but then the focus has to be on turning Bilboes to account. Shareholders and in-country stakeholders get quite edgy, quite rightly, quite understandably, if people like us seem to be sitting on high-quality assets which are going nowhere. So we're under pressure, both personal pressure to get this thing done quickly and make some money, shareholder pressure, stakeholder pressure to get things moving. So turning Bilboes to account is our main priority. Secondary to that is we have another asset which is immediately adjacent to Bilboes called the Motapa property, which in geographic terms is slightly bigger than Bilboes. In the old days, in the 80s, Bilboes and Motapa were run together as a single asset by Anglo-American Zimbabwe. When Anglo withdrew from Zimbabwe, Bilboes and Motapa got split asunder. We're pleased we put them together. So we have now started exploration work at Motapa, and hopefully we'll start announcing some preliminary results of that work in due course. If everything goes well, that's got probably a 3 to 5 year time horizon to get to even a PEA or a feasibility study on it. But in due course, once we've got Bilboes going, the next step will be then to turn Motapa to account, either to make Bilboes plus Motapa bigger, or make Bilboes plus Motapa longer, with a longer life of mine. But right now, our focus is on keeping Blanket running sweetly, and then turning Bilboes to account.
Mark, appreciate your time. Thank you for giving us an overview of Caledonia Mining. Obviously, the success that you turned mining to what it is today. Giving us an overview of what mining is like in Zimbabwe, and I can see you're passionate about the country, and there's certainly a lot of opportunities in Zimbabwe, and it looks an exciting jurisdiction for the future of mining in the country.
Good, thank you, Rob.
If our audience wants to reach out to you, if they've got any questions, if they want to follow the story, how can they go about doing that?
Yeah, if you go to our website, there's contacts at the back of our website, the contact page on our website, and we are transparent. We do respond to queries. Clearly, we can't answer every question if it would mean that we're unregulated disclosures. So you've got to accept we are a listed company, and we do have to follow the rules of the various exchanges. But by and large, we do respond as quickly as we can to any approach. So you think you'll find the contact information is on the contact page of our website, which is www.caledoniamining.com.
And we'll include those all in the show notes, the company's podcast, for easy access.
For people in the UK, we are followed by Cavendish and by Librum, both of whom cover us, both of whose analysts have visited. In the States, we're covered by Cantor Fitzgerald.
Okay, that's great.
And in South Africa, we're actually covered by Standard Bank.
Okay, Mark, really appreciate your time. All the best for the remainder of the year, going into next year, and maybe come on the podcast at a later date and give us an update on the Bilboes project, see how that's developing.
Good. Thank you, Rob. Thank you very much.
Okay.
Thanks.
Hope you enjoyed that episode. As always, appreciate your continued support. As always, please keep sharing these episodes far and wide, not just within our mining industry and our mining community, but more globally, and people outside of our mining industry as well. As always, we need to improve the image of mining, and we need to educate those that are not in our industry what mining is all about. Again, thank you for listening, and until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.